Ripple XRP holders, get ready before July 1st. Will there be a victory in the lawsuit with this crazy new discovery changing everything? Fidelity, Charles Schwab, Citadel Securities are backing a massive crypto exchange called EDX. And in this video, I'm going to talk about what that means for Binance, what that means for Coinbase. We're getting into all of the news and breaking down step by step exactly what's happening in the crypto space. So you're not going to want to miss a second of this video. We're going to talk about XRP and what's happening on the XRP as well too, what's happening with Bitcoin as well, and then also in terms of the entire cryptocurrency market being up the past 7 days. Bitcoin up 8%, Ethereum up 2.5%, XRP down 5%. What is about to happen next is going to shock everyone in the space. So comment 777 if you're feeling blessed, if you're feeling hyped, if you're feeling excited. 25,857 cryptocurrencies. Let me know what you're holding in the comments below. And as always, watch out for the impersonators. Watch out for the scammers. Watch out for people that are trying to get money from you in the comments. The only things that we ever recommend are in the description of the YouTube videos, never in the comments. A $1.1 trillion market cap right now. The crypto industry is just getting started. Bitcoin is surging to about almost $28,000 right now. You see this massive green candle. It broke out from this falling wedge formation. You know, if Bitcoin were to stay in this falling wedge and the bears were gaining strength, then a potential head and shoulders pattern forming long term. Ultimately, I do think that Bitcoin will see another dip. Now, this news right now in the markets for the day is very, very good news because it shows that institutional players are coming into the crypto space. And the saying that I had in previous videos was, you know, if you can't beat them, join them. So that's what they're doing. They realize they can't beat the excitement and the momentum and the technology and the innovation in the crypto space and blockchain technology specifically. So these massive companies and these massive banks are trying to join them while the SEC is trying to destroy them. Because if you can't join them, buy them. If they won't let you buy them, then you have to try and destroy them. And that's exactly what the SEC is doing. And so, you know, they're kind of caught with their own tail in the door with what happened with Ethereum in the Hinman docs. I'm going to cover it a little bit, but looking at Bitcoin right now, you know, where Bitcoin is going to go next. I mean, trying to pull out the crystal ball here in terms of technical analysis. You know, I do feel that we'll come back down at some point if we go back and we go to the daily candles right here, just so I can show you guys this. And let me remove the chart on the right hand side. We'll get to XRP in a little bit. The reason why I want to talk about Bitcoin is because Bitcoin moves the rest of the markets. And if we're looking at, you know, the pi cycle bottom indicator, the pi cycle bottom said that the bottom was right around here. It was off by a little bit when the bottom dropped down to $15,000. But if I were to pull up the moving averages and I turn on the 50-day moving average and the 200-day moving average, we see right here that Bitcoin just broke above the 50-day moving average. Generally speaking, when Bitcoin remains above the 50-day moving average, you know, we're in a bull market. As you guys can see back here, you know, when Bitcoin crossed above the 50 moving average after COVID, it stayed above it several times. I mean, it did dip below it a little bit, but it rode above it, rode below it. And then once we finally went above it back in October of 2020, it stayed above it until the pi cycle top was in. And then when it dipped down below it, this was the dead cat bounce that signaled that the bear market was over. The all-time high was in, and then Bitcoin remained below the 50 moving average for most of the bear market until the bottom was officially in. So in order for Bitcoin to maintain bullish momentum, it is critical that it holds the 50 moving average in blue. And that's exactly where this resistance was right here, which is about $27,000. So it needs to stay above 27, you know, roughly $28,000. Otherwise, if it does not stay above the 50 moving average, you know, as we saw right here, where we see, you know, potential left shoulder, if this head and shoulders pattern forms, you know, we saw it dive down below it, then we see the head right here, and we saw it trade down below it in this falling wedge. If Bitcoin is moving up here in this range and it kind of fakes everyone out, then we could see one, not that far down, we could see one drop. This is what I'm expecting. Now, I could be wrong here. You know, I hope Bitcoin just consolidates sideways, then goes up even higher. But I would be expecting another drop back down to the 200 moving average in red, and then for it to hopefully hold that 200 moving average. If it doesn't hold that 200 moving average, then a drop down within the $21,000 range come after the Fed Now launch, because this news right now that's happening is bullish news. But ultimately, when Fed Now launches, then they start launching their global CBDC infrastructure and the plans for what they want to do for Project Icebreaker, Bank for International Settlements. I believe that will be a different black swan event that's going to make everyone fearful in the crypto industry. later this summer. But then we work our way out of here and we bounce back and then we go back in because the government's going to keep printing money. So this is what I would expect to see, something like this. Now I could be wrong here. This is just like a hypothetical. Again, don't buy, don't sell. But this would be the head and shoulders pattern right here. And then we would see, the right shoulder. If I were to move this right here, I'm just throwing this out here. We would see the right shoulder forming at some point in the near future. Price crash back down one final time. And this would be a great phase to reaccumulate in. And if Bitcoin were to dip to $21,000 to $23,000 or $25,000, I'd personally be accumulating more Bitcoin while everyone would be in fear. But you guys know that we have periods of bullish price action and periods of bearish price action. Right now, since April of 23, we've had bearish momentum. So if Bitcoin does the opposite, and if it were to hold the $27,000 range and then just keep trading up to the upside, we would have a dip later, right? And then Bitcoin might not come down to the $21,000 to $23,000 price range. So the only time that you might have to accumulate Bitcoin would be around $29,000 to $30,000 before we take off from that range. But my narrative for crypto over the next few years is bullish. I don't think that we're going to go down to 10K. Now, I could be wrong here. If we go into like a World War III doomsday scenario with China and their earthquake technology and stuff, then I don't know how that's going to affect the markets. We haven't seen anything like that ever. In terms of if I talk about warfare and stuff, they're not fighting a war with people. They're fighting a war with weather and fighting a war with technology and the planet and chemicals and all sorts of other stuff as well too. So who knows how that would affect the market? I mean, it's anyone's guess here. The best thing to focus on is skill sets, obviously, and then subscribing to the channel and hitting that like button. Because when we look at XRP and we compare XRP back to 2013, I believe we are roughly right around here. And so for the one final dip for Bitcoin, for accumulation, for those of you out there that want to get a better price for it, again, you can't wait for it to dip lower because you just got to have a macro market perspective. But for XRP, I think we're right about here. So I do think that we're not going to blast off right now, but hey, I'm holding it, I'm waiting. I feel the XRP is going to draw down one final time later this summer, and then we're going to take off out of this range and we're going to see something happen. So I think there's going to be one last shakeout event. That's what my guts tell me, and that would coincide with this upward trending support line as well right here. If I were to draw this up for you guys, you can see in yellow, come back down to this upward trending support line because this is what it's held since the pi cycle bottom, and it's teetered around this since July of 2022. So the likelihood of XRP filling this zone right here is high in my opinion. So for it to dip down one final time, a lot of people would be freaking out, but the smart investors would accumulate this, even if it's a quick wick down and then it bounces out of that like a V-shaped recovery really fast. I believe XRP could do something amazing after that. Now, price predictions for XRP, where it could go, I mean, that's anyone's guess based on what I'm about to talk about, because John Deaton shared a screenshot of a part of the SEC's argument that highlighted its position that the XRP traded even in the secondary market is embodiment of those facts, circumstances, promises, and expectations, and today represents the investment contract. And so in this thread on Twitter, you guys can check this out, screenshotting this, saying the XRP traded even in the secondary market is the embodiment of those facts, circumstances, promises, and expectations, and today represents the investment contract. And although he's certainly one of the lawyers discussing uncertainty issues, he doesn't mind the comment because he agrees with it. Unfortunately, when the SEC takes the position that the XRP traded, even in the secondary market, represents the investment contract, one is forced to. And so if you guys want to scroll through this Twitter post right here and see what he's talking about, he stated that he asked the SEC to provide just one example in which it had been determined that there had been an investment contract, even though there had been no privity or contract between a buyer and a seller or a promoter. He stated that the SEC failed to prove its claim. When all the law is taken into consideration, the SEC has nothing to support its theory that secondary market sales are also securities. And Deaton stated, he added that some may argue that the SEC has the right to pursue novel theories unsupported by the law, but he disagrees with this. He stated the SEC has the authority provided by Congress and existing laws, and if novel, unsupported theories are being pushed, and the application of the fair defense becomes necessary. So as reported, believing that the ruling judge in the Ripple versus SEC case is likely to address the issue of secondary market sales as opposed to the opinion of some that this might not be addressed. And he offers three explanations for this. Okay, number one, First, the SEC's motion for summary judgment nearly compels the judge to grant it as drafted. Second, the judge chooses not to be silent on the multiple amicus briefs submitted in the Ripple dispute, including the one by John Deaton on behalf of XRP holders. So this may shed light on the secondary market sales. And third, the judge may be aware of the precedent concerning secondary market sales established in the Library versus the SEC case because, Library token, the secondary sales were claimed not to be securities, whereas how they launched it were. And when we look at the Hinman documents released in the SEC case, it's a boost to Ethereum, according to JP Morgan. So the release of those papers last week are likely to trigger a move to more decentralization in the crypto market. JP Morgan said in a research report on Thursday, in emails tied to the former director of corporate finance, William Hinman's 2018 speech, saying that Ethereum did not look like a security, were published last Tuesday, and that's been covered all over the internet. We covered that on the channel as well too, and the speech acknowledges that there is an other category, is what it's called, and the other category, JP Morgan says that these revelations and these uncoveries could explain why the regulator has not taken action against Ethereum while targeting other crypto tokens this year. Woo! Hope you guys are feeling great, all right? Had to let that one go. Now you're paying attention, okay? The Hinman documents are likely to influence the direction of the U.S. congressional efforts to regulate crypto, and they're going to change laws based on this. So this is the most important case in finance history. We got to be paying attention here, and the easiest solution for Congress will be to put Ethereum in the same category as Bitcoin and regulate it as a commodity, which would be regulated under the CFTC rather than the SEC. And the other category could be introducing specific to Ethereum and other cryptocurrencies that are decentralized enough to avoid being classified as securities, the bank said, but they wouldn't be commodities. Adding that more decentralized a cryptocurrency is, the higher its chance that it would avoid being designated as a security, because if it's controlled by a founder and the marketing efforts of the founder would grow the project and people are expecting a profit, that's what they're saying is a security. And so when you look at Bitcoin, nobody knows who the founder is. There's no control over it at all. The only thing that controls Bitcoin is obviously whales, the news, and then what BlackRock chooses to do behind the scenes, which I'm going to get into in a little bit. So why July 1st? Well, it's an important date for the Ripple lawsuit judgment. And if we look right here, in March of this year, Judge Torres ruled on motions filed by both parties to rule out expert testimony. Over 100 days from the March ruling, the summary judgment is still awaited as everyone holds their breath. And the delay is longer than the judge's average time taken for the Daubert rulings in previous cases, and hence the summary judgment in Ripple's lawsuit is expected to come anytime. But will it happen before July 1st this year, coming up in 10 days? The U.S. Federal Reserve has already announced that the FedNow service will begin operations in July. So this is very interesting because in the United States, around the clock and throughout the year, among the banks that have been onboarded for the July 1st launch are 3 Ripple partners and 3 banks that are partnered with Ripple: Finastra, Volante Technologies, and ACI Worldwide. Hence, the crypto community, everyone is wondering whether the Ripple lawsuit and the judgment will be delivered before the FedNow launch is going to be happening. So we are waiting on the edge of our seats, and we will keep you guys updated the moment that the news breaks, because finance giants are expanding their crypto horizons with the new exchange launch at this time too. The world's a stage, and we're grabbing our popcorn and backing up the trucks because EDX markets aimed at institutional investors launched today after a litany of finance behemoths announced its creation back in September 2022. And the exchange's major backers are Citadel Securities, Fidelity Digital Assets, Virtue Financial, Charles Schwab, Sequoia, and Paradigm, which is why Bitcoin is surging right now because of this bullish news. And it's having a hard time. Observers had a hard time divorcing EDX's launch from the recent slew of regulated crypto entries such as Prometheum, Deutsche Bank attempt to become a crypto custodian, BlackRock with its interest in its spot Bitcoin ETF. If we look here on Twitter, there it is. This is what Haska Trades is saying. Crypto exchange EDX markets, backed by Citadel Securities, Fidelity, Charles Schwab operates, drown the crypto native exchanges in lawsuits, generate fear around them, and then let the Tardify vultures swoop in. And so that's what they're planning on doing. And here's why. Prometheum in particular marks the beginning of a trend of firms to all of the SEC's demand to operate without incident in the U.S. Unlike Binance and Coinbase, both of which were sued by the securities regulator in early June. So could these lawsuits have been filed? Not only, number one, I'm not saying this is true. I'm just curious on your guys' thoughts here because this is what people are saying. Number one, could it be because the SEC needed a backup plan in case they lose the lawsuit versus Ripple and XRP becomes, the main bridge currency for all these things we've been talking about the past year? And number two, could it be that they filed these lawsuits so they can usher in this new exchange and try and take out Binance and Coinbase on their hit list? Because like Prometheum, which is the only company so far to receive a rubber stamp from the SEC and FINRA to offer digital asset custody services, EDX appears to be taking a cautious approach with securities regulators. And to demonstrate that, right, in the Binance lawsuit, what the SEC did is they deemed 10 tokens as securities: Solana, ADA, Matic, Filecoin, Atom, Sand, Mana, Algo, AXS, and Cody. In the Coinbase suit, claimed an additional 7 crypto assets were securities: CHC, Flow, ICP, NEAR, VGX, Dash, and Nexo. And I believe there was like 67 or 69 cryptocurrencies total on that list. And the SEC thinks all cryptos are securities, so there's probably even more on that list. But none of the tokens mentioned above are available on the EDX at launch. So the Wall Street Journal reported that only 4 cryptocurrencies, which were Bitcoin, Ethereum, Litecoin, and Bitcoin Cash, are safe right now for them. Essentially, EDX appears to be getting ahead of the storm. Exchanges left and right have been delisting tokens after the SEC clamped down, which is what's putting that metaphorical boot on the car of the crypto industry, so to speak. And most recently, Bakkt removed support for the native tokens of blockchains such as Solana, Polygon, Cardano. Trading app eToro delisted Algorand, Decentraland, Polygon, and then also Robinhood was telling everyone that they had until, I believe it was the end of this month or end of next month. I'd have to double check on that. I made another video about that, so you guys want to check that out by subscribing to the channel. But additionally, EDX's crypto operations, this is important to know, they've been modeled after the stock market, which is under a much clearer regulatory umbrella than crypto, and it's even more manipulated. Just as investors don't have direct access to the New York Stock Exchange, EDX will funnel trades on its marketplace through retail brokerages. And this is a key difference from how Binance and Coinbase have been operating their exchange, both of which allow investors to directly trade tokens. EDX is a non-custodial exchange, and what this means is they do not plan to launch a clearinghouse to settle trades. Still, even after that, it still uses third-party banks and crypto custodian as a crypto custodian. And EDX is set to announce the conclusion of a second funding round on Tuesday. So how is this platform, different than something like Binance or Coinbase or Poloniex or Kraken or whatever? Because they've avoided the crypto asset securities targeting these lawsuits, and they position itself as that non-custodial exchange. So what that means is that a non-custodial exchange platform, it doesn't hold its customers' crypto tokens. And instead, it ensures that customer assets will be held at third-party banks. So that's what they want. The banks want to control more of your money, more of your crypto. They act as a crypto custodian, saying money's not safe in these exchanges. They're not safe in Coinbase or Binance or FTX that can be hacked. They're safe with the banks. Give your money to the banks, and your customers' assets will be safe in the banks. And it's very clear of what happened with those bank runs and customers not being able to get their funds, that nothing's safe in the banks. For example, Coinbase, they act as a custodian for their customers' crypto, and unless you opt for self-custody wallets like the Coinbase wallet, or you do offline storage like through a Ledger or Trezor, while it's simple to start trading crypto with an exchange that holds your tokens, risking losing your assets in case the exchange is hacked, you could lose everything. And so your money is not safe unless you actually physically hold it, right? Like silver or gold. It's not safe in an ETF. It's not safe in a crypto exchange. Even what the SEC, like for example, Ledger, they made an announcement of how, they're going to be having all these third parties if you want their other service. And that sketched out everyone in the crypto space is Ledger safe? Are these offline hardware wallets safe? Because for example, I got like 3 of these Ledger Nano X's and they were the most legitimate company. Now everyone's worried about that. So where do you keep your money? What do you put your money in? Because the exchange operates as a platform connecting a network of firms for executing and settling trades between crypto assets and fiat currencies. However, it does not help settle those trades just yet. EDX hopes to launch a clearinghouse business later this year that will enable it to carry out settlements. And the launch of exchanges comes shortly after BlackRock's filing for the first spot Bitcoin exchange traded fund in the United States indicating sustained institutional interest in the long term in the crypto market, despite industry setbacks and regulatory concerns. And if we go to the community section, if you guys read this on the community section above our videos, shorts, playlist, and community, you scroll down, you can check this out. Also, right here, if I scroll all the way down, look at the top 10 owners of Coinbase. You got Vanguard, ARK, Nico, Assets, and you got, if I pull up the picture right here, this is absolutely insane to think about, because when you look at how massive these companies are and what else they control, Fidelity controls 3.69% as a stake in the shares held in Coinbase and Coin, right? BlackRock, 3.24, Morgan Stanley, Goldman Sachs as well too. And so do you guys think that if BlackRock owns the media, BlackRock virtually owns the world, do you think that they're going to let crypto go down? Do you think that they're going to invest in a company that wouldn't be around long term? I think it's very, very clear, and that's very, very obvious.